Welcome back to the deep dive. Today we're jumping right into a really fascinating, almost contradictory story. Novo Nordisk's latest results for Q3 and the first 9 months of 2025.
Yeah, it's quite something.
We're looking at a company reporting, just incredible success. Sales are through the roof, driven by obesity treatments, but at the same time, they seem to be acting like they're in crisis mode.
It's a real corporate paradox, isn't it? You look at the source material, their financial reports, their earnings call, and you see this giant, highly profitable company.
Right.
But it's acting like its future's hanging by a thread. They're making this huge strategic shift, cutting thousands of jobs, simplifying things, while simultaneously spending billions with a B on acquisitions, trying to defend a market share that, well, it's starting to shrink.
You've hit the nail on the head there. That's the tension. So our goal today is to really unpack this high-stakes strategy. How do you justify cutting nearly 10,000 jobs when your main product line is growing over 50% year on year?
It's the big question.
We need to look at the threat they're seeing behind those glowing numbers, understand the rationale for this, well, pretty radical internal shakeup, and then assess these massive M&A bets they're placing. It feels like the biggest pharma arms race in years.
It certainly does. Let's maybe start with the core numbers. First 9 months of 2025 using constant exchange rates, CER.
Okay.
Now, if you just look at the surface, the raw data, it looks fantastic. Sales up 15% overall, healthy growth.
And that's pretty much all down to the GLP-1 drugs, isn't it? Obesity care was the main engine, you said, growing, what was it, 41%?
41%, yeah. And Wegovy specifically up 54%. Even their older GLP-1 diabetes drugs grew 10%.
Okay, so on paper, like you said, fantastic. They're absolutely crushing it. So why all this talk about restructuring? It sounds almost like panic.
Well, because you've got to look past that top line. You need to dig into the adjustments they made.
Ah, okay.
In Q3 2025 alone, Novo Nordisk booked DKK 9 billion in one-off restructuring costs.
9 billion Danish kroner. Let's translate that. For our listeners, that's roughly, what, 1.3 billion US dollars? Gone in just 3 months.
Exactly. It's a huge hit to the current bottom line.
Massive.
And here's the context. Their operating profit, on paper, grew 10%. But very three, if you take out that $1.3 billion in restructuring charges,
Right.
their actual operating profit growth would have been 21% at CER.
21%. So the underlying business is incredibly strong.
Fantastically healthy, yes.
Yeah.
But leadership clearly decided that taking this immediate $1.3 billion hit now, well, it's necessary to prevent problems down the road.
Yeah.
Future stagnation, maybe.
Okay, let's try and unpack that rationale because, it does sound a bit skeptical. Are we sure this isn't just Novo Nordisk kind of ditching areas they weren't really winning in anyway and then spinning it as some strategic pivot that they can afford because they're flush with cash right now?
That's a fair point to raise.
Right.
But the source material, what they're saying, it does suggest a genuine commitment to hyperfocus.
Oh.
They're explicitly announcing this shift to concentrate only on diabetes, obesity, and related conditions, comorbidities.
Solely on those.
Yes, which means stopping work on non-core assets. The example they gave was discontinuing their stem cell research for Parkinson's disease.
Right, saw that.
So those resources, the people working on those non-core programs,
Yeah.
they're either being moved or, well, cut.
And that's where the big job cuts come in, this global workforce reduction. Roughly 9,000 positions.
Exactly. And look, it's not just about saving money in the short term. It's about aggressive refunding.
Refunding. Explain that.
They estimate that this intense focus, the streamlining, will generate about DKK 8 billion. That's around $1.15 billion US in annualized savings by the end of 2026.
Okay, annualized savings.
But here's the crucial part. They've committed that every single DKK, every cent of that saving will be plowed straight back into expanding their core diabetes and obesity franchises.
Ah, I see.
So they're taking a hatchet to the overall headcount to basically funnel more money into R&D and sales for their biggest winners.
So burning $1.3 billion now to fund a more specialized, hopefully more profitable future. But even with that plan and the current amazing growth figures, they actually narrowed their outlook for the full year.
Yes, that's right. The full year 2025 sales guidance was narrowed slightly to 8-11% growth at CER.
It's a small change, but it feels significant, doesn't it?
It's very telling, I think. It suggests lower expectations for their core GLP-1s going forward, and they explicitly mention intensifying competition and pricing pressure as the reasons.
So even with this massive internal effort, they see the external challenges, the headwinds getting stronger.
Significantly stronger, it seems. Which brings us nicely to section 2.
Right. Those headwinds. This is where the real drama seems to be. They're facing a proper assault on their market dominance.
The numbers here, well, they'd be alarming for any market leader, frankly. Globally, Novo Nordisk's total GLP-1 volume market share that's across both diabetes and obesity, it fell pretty sharply.
How much?
From 67% in August 2024 down to 59% in August 2025.
Wow. An 8 percentage point drop in global share in just 1 year. That sounds like panic mode territory, doesn't it?
It's a big drop.
That tells me their main rival, especially in the US, must be absolutely eating their lunch.
It definitely signals relentless competition. And if you look outside the U.S. and their international operations, the numbers are even starker, actually.
Really?
Their GLP-1 diabetes value market share. It plummeted from 71.6% down to 56.3% over the last 12 months.
Okay, so competition is hitting them hard everywhere, not just the US.
Brutal toll, yes. And think about a key growth market like China. They actually admitted they're losing the online battle there.
Why is that? What's happening online?
Well, they pointed to specific regulations. Apparently, Wegovy isn't allowed to be sold online in China right now.
Ah, okay.
That's a big disadvantage. Huge, especially in China where e-commerce is massive. Competitors who can sell online have a clear advantage, and it's directly hitting Novo's growth hopes for the region.
So, okay. They're getting squeezed internationally, facing price pressure and competition in the US. So their counter strategy seems to be doubling down on the untapped market, the millions of people who might pay out of pocket. This cash channel strategy.
Precisely. Their commercial teams are really focusing hard on partnerships for that cash channel.
Like who?
Well, big retailers like Costco, Walmart, but also telehealth platforms. Think GoodRx, LifeMD, RO.
Right. Makes sense.
The idea isn't just about selling more units. It's about access and making it easier for patients. If you can get the drug to someone willing to pay cash, maybe offer a simpler path via telehealth, you avoid the whole insurance maze.
And potentially tap into a whole new group of patients.
Exactly. Expand the overall market. But regardless of how well that cash channel does, there's this huge structural change looming in the U.S., the Inflation Reduction Act.
Ah, yes, the IRA. Novo accepted the maximum fair price, the MFP, didn't they? For Ozempic, Rybelsus, and Wegovy in Medicare Part D.
They did, and this creates a predictable but significant financial headwind starting January 2027.
Predictable, but painful.
Painful, yes. Accepting it means for those critical Medicare Part D patients, they lose control over the price. It effectively puts a multi-billion-dollar cap on potential revenue from that group.
Did they estimate the impact?
They did. They reckoned that if the MFP had started back on January 1st, 2025, it would have knocked a low single-digit percentage off their global sales growth for the year.
Billions of dollars in lost potential revenue they now have to plan for.
Exactly. And just to add another layer to their challenges, they openly mentioned that their market research shows widespread compounding is still happening.
Ah, the compounding pharmacies making knockoffs.
Essentially, yes. And that continues to eat into their legitimate sales growth in the U.S. So it's like a three-front war. Established rivals, new regulations, and illicit compounding.
No wonder they feel under pressure. Which leads us to the pipeline and the acquisitions.
Right. Given all this pressure, you hear leadership saying things like, no pipeline is broad enough.
Meaning they need more shots on goal.
More shots, different kinds of shots.
Mm-hmm.
They want to treat hundreds of millions of people globally. That means they need different types of treatments quickly. And that justifies this M&A frenzy we're seeing.
They can't just cut costs to win. They have to spend big on the future. So where's this newly freed up cash going? The biggest one seems to be the proposed deal for Metsera, $10 billion. What makes that so vital?
Metsera looks like it's all about complementary innovation, adding things they don't have in-house. The deal structure is up to $10 billion, yeah, with about $6.7 billion up front.
And the assets.
Strategically very valuable, it seems. They highlighted MET97, that's a potential best-in-class once-monthly GLP-1.
Once a month. That's a big deal for patients.
Huge for convenience, but also for compliance, right?
Yeah.
Keeping potentially millions of people on therapy long-term. That's massive economically. They also get MET2233, which is a next-gen amylin asset.
Oh, okay.
It helps them build a portfolio to target different patient needs based on their BMI, age, other health issues, comorbidities, tailored treatments.
Okay, that makes sense. And then there's this really significant move into treating those related conditions, the comorbidities, with the Akero Therapeutics acquisition, targeting AGA-SA.
Yes, this feels like a big defensive but also offensive move. MHH, metabolic dysfunction-associated steatohepatitis, is basically a severe type of fatty liver disease, often driven by the very things Novo treats. obesity and diabetes.
This fits perfectly.
Exactly. The asset they bought is efruxifermin, or EFX. It's in phase 3. And the clinical data on EFX. All right. Well, that's why it was so expensive and why Novo wanted it so badly.
What was the standout result?
EFX is apparently the first drug candidate to show statistically significant regression of fibrosis in patients with F4 MAS.
4, that's the really severe stage, cirrhosis.
Compensated cirrhosis, yes.
Uh-huh.
The sickest group. In the phase 2 trial, they saw a 29% improvement in fibrosis compared to just 11% from placebo.
And there are no treatments currently approved for those F4 patients.
None. Zero. So it addresses this huge unmet need. Novo essentially paid billions to potentially own the first treatment for the worst outcome of obesity-related liver disease.
A very strategic buy. We should also quickly mention they're still active in rare disease, even with this intense focus elsewhere. They bought Omeros' asset, zoltenibart.
Right, that's an MASP3 inhibitor. It targets rare blood and kidney disorders like PNH paroxysmal nocturnal hemoglobinuria.
A serious blood disorder.
Life-threatening, yeah. So it shows they're keeping their rare disease research going, even alongside the GLP-1 giant.
Okay, now let's quickly turn to their own internal pipeline. Their next-generation weight loss drugs seem to be hitting key milestones, too.
Absolutely. Cagrilema, that's their combination drug, showed really impressive phase 3 data from the first big trial, REDEFINE 1.
Oh, are the numbers?
11.8% weight loss at 68 weeks. And importantly, about 1 in 3 patients lost at least 15% of their body weight.
Pretty significant.
Very. And the next big phase 3 trials for Cagrilema, RENEW 1 and 2, they've already started.
And what about the pill version of Wegovy, oral semaglutide?
That's moving along too. It's been submitted for approval in the EU based on data showing 16.6% weight loss, the OASIS 4 trial.
16.6% from a pill.
Yeah, and the FDA decision in the US is expected by the end of this year, 2025.
That oral option could be massive, couldn't it? Especially for that cash channel we talked about. Easier access.
Potentially huge for expanding the market, yes.
Yeah.
Plus, their internal triagonist drug combining GLP-1, GIP, and amylin that's moved into phase 1b2 testing now showed a good safety profile so far.
And we shouldn't forget updates on their existing drugs getting crucial new indications. Rybelsus got its cardiovascular approval.
Right, based on the SOUL trial. Showed a 14% reduction in major adverse cardiovascular events, MAC. That's a big deal for a diabetes drug.
And MIM-8 for hemophilia A was submitted in the US and EU.
Yep. So the internal pipeline is definitely still firing, but you can see how expensive it all is, R&D plus these huge acquisitions.
Okay, let's wrap this up. What's the big picture here? What does this really aggressive pivot mean?
Well, the key takeaway for me is that Novo Nordisk is facing an intense threat, and they're responding with equally intense action.
Right.
The 9,000 job cuts, that $1.3 billion restructuring cost up front, their rapid multi-billion-dollar acquisitions of Metsera and Akero, it all points to one thing. They are hyper-funding a strategy purely designed to defend their GLP-1 dominance.
Sacrificing anything that isn't core.
Exactly. Sacrificing breadth to ensure depth and supremacy in diabetes and obesity, while simultaneously buying differentiation for the future, like treating severe MSH.
It's a massive, almost forced transformation, isn't it?
It really is. And it raises, I think, a really interesting question for you, the listener, to consider.
Okay.
If this new strategy demands such deep specialization, if it requires spending billions on complementary assets, like Akero for those very sick MSH patients, just to compete in this fragmenting market, well, how does focusing so intensely on one core area actually impact the company's long-term resilience?
That's a good question. They're definitely maximizing their current strength in GLP-1s, but are they concentrating their future risk too?
Potentially. By pouring everything into GLP-1s and related conditions, are they building the best possible defense against the rivals they see today?
Or are they making themselves more vulnerable if something totally unexpected comes along tomorrow? A completely different scientific breakthrough, maybe. Something outside their narrow focus.
It's a huge bet, isn't it? A massive bet that the future of medicine, or at least a huge chunk of it, revolves around metabolic health. It's this fascinating trade-off between hyper-specialization and diversification.
And it's a trade-off whose consequences, good or bad, shareholders and patients are going to feel for many years.
Absolutely. Lots to watch.
Indeed. We look forward to diving into your next stack of sources soon. Thanks for joining us for this deep dive.